There's a lot to be said about human nature and how it applies to trading. And one vastly important aspect to come to terms with is the instinct to keep hold of what we have. And the problem with this comes when those days where conditions are ripe for a strategy, it's easy to miss out on a lot of extra ticks. And you won't always be able to take everything that's there when the markets are good. But if you don't want to push a trade, you'll probably see some of your good days turn into great days. Taking a few winners and then stopping for the day is going to mean leaving a lot on the table on those kind of days. But on other days, it can mean saving a lot of money and hassle. So how do you decide whether to carry on trading when you've hit a certain level of profit? So even if you don't have a daily profit target or a set number of trades, as we suggest with the power of quitting here at Netpicks, the chances are you'll have a figure you'll naturally become happy with, or will at least start to seriously weigh the risk of taking another trade and the chance of losing what you got. I know when I get to this stage, my natural instinct is just to keep trading. And on occasions, I made money when I listened to my gut and kept trading. On other occasions, I've lost money. But in the vast majority of cases, I finished the day tick neutral from my original target, had a whole heap of extra round turns on the board, and exerted a significant amount of additional concentration and emotional stress. The other type is a trader who leans towards stopping as soon as they get close to the target. So the issues which must be addressed in order to assess whether it's a good idea to stop or continue trading are market conditions turning suboptimal, switching off mentally, being emotionally opposed to continue to trade, and the I should have stopped syndrome. Let's take a look at each of these issues before moving on and how to decide whether we're going to continue to trade. Market conditions turning suboptimal. And this is perhaps the most obvious issue when it comes to pushing yourself and attempting to have a big day. Sometimes there's going to be some really good moves early on due to the economic reports, for example. And sometimes there's going to be market moving speakers, which temporarily elevates the level of volatility. When the smoke clears, though, and the markets begin to crawl, if you're still trading, it's like it's moving well, you can really find yourself in trouble pretty quick. The second one is switching off mentally, and there's two aspects to this. First off, it's literally having switched off after hitting an acceptable or a good target. You're no longer monitoring the markets with the same levels of attention, and your mood has become overly relaxed. Trading from this point on is potentially devastating if you're not careful. You could end up turning a decent day into a really big down day. And the other aspect is when you're already exerted a lot in terms of effort and emotion. The same applies as with the first aspect, although you're far less likely to want to continue to trade, and rightly so too. If you're not sharp or able to concentrate, your odds of trading effectively decrease significantly. The third, being emotionally opposed to continuing to trade. So let's say you had a bad run, or it's Friday afternoon and you're looking forward to the weekend and a couple of drinks with friends. You got a tidy profit and you want to bank it. So if you're on a bad run, turning it around is something that needs foundations to build up on. And regaining a level of consistency is the all-important factor. Now, one good day in these circumstances, it's good, but it's more important to get on a roll of positive days. So in terms of it being Friday, well, I know when I've lost a nice profit, the weekend has not really been fun. It's a pretty difficult thing to stomach as well when you've given up a profit like that. So when you're at this point and you want to stop, your emotions are heightened. Trades are less likely to be as objective, and every tick against you becomes an emotional drama. The fourth is the I should have stopped syndrome. When you've wanted to, or you felt it might be good to stop, but you've carried on trading and you lost it all, it's pretty easy to beat yourself up about it. It's what I call the I should have stopped syndrome, and it's definitely not a really good feeling. But what's worse is that there's no bias to this feeling. What I mean by that is whether or not you did the right thing and traded in the right way because you felt unsure about continuing to trade, your mind tells you you're a bad trader. I was too greedy, or I was too dumb to carry on. They're pretty fairly common and destructive thoughts. And to break out of this train of thought, it's really beneficial to go back to your trading journal, if you keep one, at a time when you're less stressed and tired. It may be that your trading was really poor, but even good trading that resulted in losses can feel terrible in these circumstances. So I hope it's apparent that the problems are potentially numerous in pushing for a large day. But again, I'd reiterate at this point that if you can become skilled at identifying when to push, it can really make a big difference to your bottom line. So to decide on whether continuing to trade and push is justifiable, you got to consider the points we just talked about. To work out if the conditions are ripe, you must not only have a firm handle on the way you monitor the markets and how they're trading, but you also have to ensure you are aware of what the best conditions are for your trading system. It could be that it would just get trounced on a day when price is strongly trending. Or it could be that the same type of market is really good for the strategy. You must also be able to objectively determine what your mental and emotional states are throughout the day, and in particular, at that point where you make the decision of whether to continue trading or to pack it in for the day. And finally, you must decide how you will trade if you do. Will you cut your position size in half? Will you stop if you lose half your profits? Will you trade all of the same setups as before? And all of these things have the potential to help protect you from the "I should have stopped" syndrome. Now, since many traders like to use indicators, usually the wrong way, for their trading method, Netpicks has put together a free and vital indicator blueprint to put you on the right track when using an indicator for your trading decision. And you can get access to the PDF and the videos by clicking here.